Amy, what is GCL doing to survive and cope with this current down cycle? And when do you guys see the industry starting to swing up again?
Well, thank you, Dan, having me today. I want to talk about our company strategy first. Obviously, it is painful in the near term to see a substantial overcapacity in the industry. But on the beyond that, we see this is the fourth time that I'm observed in this industry. Every time after supply-demand balance itself, we see a better technology, better company to be survived in this cycle. And we are fully anticipate that, because GCL has been a long-term player in the polysilicon segment. So this time, we fully anticipate in terms of a better balance sheet. We have a net gearing around 15%. So cash is the king. And definitely, we manage it very careful on our cash. And then also, we look into more opportunity in overseas market while we're carefully and smartly using our money. And on the other hand, obviously, you got to have a competitive edge, which means you got to have a best technology in the industry. You got to have lowest cost structure, and also you got to have the largest operating scale. So right now we have a total capacity of 420,000 metric ton. If this capacity being fully produced this year, it counts roughly 25% global market share. And also we are the lowest producer in the polysilicon segment. So with our current FBR technology, we're using less 80% of energy consumption versus conventional silicon roll poly. And it enables us to steeper the cash cost curve of the polysilicon industries. Therefore, we be able to fully commit to our output with our key customers. So
thanks. I mean, you talk about technology, and when I talk to the executives in the solar industry chain, they acknowledge that the overcapacity problem is there, but this is an industry where technology changes so fast that if you're not investing in new factories, your facilities can be obsolete in just a couple of years. So what is tell us a little bit more about fluidized bed reactor and how you guys have developed that technology over the past few years to get it to the point where it has these advantages that you mentioned.
Sure. If you look at the solar value chain from poly to module, I would say polysilicon has the highest entry barrier in terms of technology and capital intensive. So usually in new technology, in investing in polysilicon, it may take a decade to be commercialized. That's exactly what we do in the FBR technology. So we are the first one in China to develop the traditional Siemens cold generation, power generation technology for the polysilicon and bring down the electricity consumption from 150 kilowatt hour per kilogram to 50. Whew. Yeah. So that was happening in between, I would say, at the first decades when company was developed. But in the last decade, we invested heavily in the FBR technology and by own pioneer research team, and also remarkably, in 2017, we acquired a U.S. company called Sun Edison, along with their R&D team, their IP, and also their technology in FBR. We merged these two teams together. We will be able to materialize the FBR production in China in a massive scale. So our market share was only 10% at the beginning of last year. Now we are reaching to 25%.
Amazing.
Even in a down cycle. Recently, we just announced a 3-year long-term contract with our #1 customer with over 400,000 metric ton of poly offtake contract.
Fantastic.
So, yeah.
And now, as we look forward, how long do you guys expect it for the market to digest this overcapacity that it's facing and sort of get back on an upswing again where supply and demand begin to match? And how do you think it will happen? Is it that obsolete technology will have to shut down and go away, or demand will rise to meet the capacity that's here, or a little bit of both?
Yeah, I would say a little bit of both in a short term. Supply-demand will balance itself, but it's a painful process when the high cost structure player, smaller scale player get pushed out of the system. And also, over the time, the liquidity in terms of financial support from the capital market or from their own cash generating capability have been slowed down. That's why they've been forcing out. So on the other hand, when pricing of module price continue coming down, we will see a more and more solar demand worldwide. And that actually happened very, very clear in the past cycle because in 2000, I remember in 2018 and around that time, we ran into another short-term down cycle, but real parity has arrived globally. That's it's make the cycle different because in the previous two cycle, which was between happening in the financial crisis in 2009, in 2012, we see a demand in terms of market is driven by feed-in tariff. So it's not real demand; it's driven by the policy.
Subsidies.
Yes, subsidy. So, but starting from the last down cycle, we see the demand actually coming down in the falling price, driven more demand globally. But the demand responds slower to the module price falling. So that's why you're seeing probably it's very hard to forecast solar market in a short term because it's a global demand. And every country, they have their own energy policy. And the further you go in terms of downstream EPC, the more of a self-market protection mechanism being placed in place. That's why you see a lot of geopolitical risk and talking right now. So that happens quite always like that every time in terms of down cycle, boom bust cycle. So I would expect that the demand will get balanced over the time. But I would say come back to the polysilicon segment. This is the segment probably in the near term, in the next year or two, will be balanced sooner than any segment like a wafer, cell, module, because this segment has a higher exiting barrier, which means once you've been forced out, it's hard for you coming back because either need a lump sum of cash to clean up the current existing capacity. All those existing is sitting on the ground. You got to clean up, replace new capacity. So that's why this segment is getting much easier. Yes.
Yeah, Amy, sorry, I just wanted to pick up on that point you just made there. David here, by the way, in Hong Kong. I'm wondering, this down cycle and the price wars and the overcapacity you just outlined taking place right now, do you think that comes... Do you think future innovation suffers? In other words, R&D budgets are starting to suffer because of what's taking place, and we might pay the price in the future in terms of just the technology available to us.
I don't think investing in technology will be suffered, but in the short term, you probably don't see the impact immediately. Especially come back to the polysilicon segment, it takes 10 years for a new technology to be materialized and commercialized. But speak for cell module, maybe P-type shifting N-type, it takes shorter time. But it's more of learning from each other process rather than innovation. So if you look at FBR technology, we are the only one in the world can do that in that scale. Maybe there are one or two smaller players in the world that would only much smaller, a fraction of capacity they have versus what we have. Excellent. So that's like you make a 1 car versus make 100 cars. That's so different. It's a different story.